In this video, we're going to discuss the 4 main types of traders. So there are scalp traders, day traders, swing traders, and long-term traders. As mentioned in the other video, if you're holding less than a year, you are considered a speculator. So the long-term traders are the only traders classified as investors. Each type of trader uses different position sizing and typically uses different time frames on their charts. A position size is the amount of shares or capital that is invested into the stock or position. The time frame will be discussed more in the charting section, but it's important to know that each stock chart can be broken down from minutes, hours, days, or weekly, even monthly charts. The bigger the time frame a chart is, the more zoomed out you are, and the smaller the time frame is, the more zoomed in you are. Typically, the larger the time frame is, the less emotional it will feel for the trader, and the smaller the time frame is, the more emotional it will feel for a trader. This is why many traders will use multiple time frames, giving them a smaller time frame to zoom in and a larger time frame to see the bigger picture. The time frames that I mentioned in this video are just the normal time frames that I have seen with these types of traders. So let's talk about the differences between each of these traders. First, we have the long-term traders. They are generally the least aggressive form of a trader because they are looking for moves in the long term. They will usually invest in multiple stocks and focus on their portfolio as a whole, trying to balance it out, much like how a 401k is run. Typically, investors will be using an IRA account and holding on until retirement, but they can use any type of account. Their position size can vary, but will typically be a little bit on the smaller side because they're holding it for a long term, trying to get a bigger percentage. Most of them will base their decisions off fundamentals, but some will use technical analysis as well. If they do analyze a chart, then they will be basing their trade off a larger time frame, like a daily, weekly, monthly, or even yearly time frame. Next, we have the popular swing trader. They will hold the stock from overnight up to a few months, depending on the strategy. A swing trader can be aggressive and sometimes likes to have a few positions on at a time to balance their portfolio. However, not always. They will typically be using a margin account because a lot of swing traders will use options or option spreads, which typically require a margin account. They may take a look at fundamentals like earnings or other things that make the company look appealing or even catalysts. But they will for sure be doing technical analysis on the chart. And because they're looking to hold for more than just a day, they will typically be using any time frame between 30 minutes, an hourly, all the way to a daily chart. Third, we have the day traders. Day traders are generally more aggressive than swing traders and long-term traders, meaning their position size could be larger. They will hold their positions for a few minutes to the duration of the day. One big benefit of a day trader is you don't have the risk of holding your position overnight, but most likely the percentage returns will be smaller than those of a long-term or swing trader. Day traders will usually only have 1 to a few positions open at a time, and they will be more aggressive with these positions. Because of this, they will typically use a margin account so they can use some leverage. Some day traders don't look at fundamentals at all, and others do, but they mostly trade what the chart is telling them. They will use anything between a 1-minute chart all the way up to a daily, but it is very common for them to be using a 5-minute chart. Lastly is the scalp trader. Out of all the traders, a scalp trader is the fastest and arguably the most aggressive trader of the bunch. They are looking for small percentage gains. They will typically only be in one position at a time, but can have up to a few. They're usually not worried about balancing out their portfolio at all. They are focused on that one certain trade. Some scalp traders watch the news and others only use their scanners to find stocks to trade, but they buy and sell really quick. They might be in their positions from a few seconds to a few minutes. They will use all the small time frame charts, all the way from seconds charts to a few minutes on their charts. but we'll keep an eye on the daily as most traders do. In summary, you don't have to choose one of these traders to be. A lot of traders do a little bit of all of them. Just know your strategy, and position size will need to fit with the length of trade that you are in. It could be a rough night if you are planning on doing a large scalp trade and you end up having to swing it and hold that overnight. Also, a lot of traders will use multiple time frames, especially the daily, to check certain levels on their smaller time frame charts. This also makes it so that if they are doing a day trade, they'll feel comfortable if they want to hold it overnight, if the trade doesn't move as fast as they thought it would. But remember these 4 types of traders. I'll be mentioning them over and over throughout this course. That's it for this topic, so I'll see you in the next video.